Hello and welcome to India Market Open. It's going to be a day of watching out for the Reserve Bank of India. Now, what are they going to do? What are they not going to do is the question.
And what are they going to say? And will they be asked something beyond Paytm?
Yeah, beyond Paytm. I like that. Not beyond the policy.
Yeah, beyond the policy, yeah. But well, an interesting day of trade. But Samina, good news is that ahead of the policy, I think our markets have stayed stable to maybe hardly positive, and the globe is supportive.
Very, I agree. So, but not too much expected in terms of the policy this morning. So don't get your hopes high. I think what, like Niraj and me were discussing, I don't think policy is going to be about change in the rates. But I think the governor's tone, his stance, and liquidity management will be critical, and that could be the next sort of support coming in for the rally for Bank Nifty.
Yeah, very well put. And actually, because we've heard corporate after corporate speak about how liquidity largely has been tight, maybe loosening a little bit, but largely tight thus far around, at least in the month of January, if not February. Yeah. So that is one, because the earnings season kind of spoke about it. And yes, you're right, the tone and the tenor, what they say about the Fed impact on our, because yesterday a clutch of Fed officials have kind of downplayed that, hey, you know, guys, be careful.
I think markets has always got ahead of themselves. But just talking about liquidity, Niraj, last week, and this is nearly after 6 months, where the call rate was higher than the repo rate, finally eased off. So indicating that maybe there could be some conversation around liquidity. Remember, inflation was a worry till a few months ago. Core inflation has come off below 4%, and now that's a little bit of comfort. But we'll talk about all that and more in just a few minutes on Editor's Cut. But very quickly, implied Nifty indicating to a flat start. So no surprises there. We shouldn't be getting too excited this morning. Remember, while not much action is expected from the Reserve Bank of India, it's still going to be an important cue that markets and Bank Nifty will be closely watching out for. Like we said, global Q is largely supportive, so there is nothing too exciting in the world. Well, what if you want to call exciting? One thing could be the Chinese inflation continues to decline for the 4th straight month. Now, why this is being raised is because Chinese officials are now worried that this could turn disinflationary, and that is always bad for the economy. So China, amongst all its concerns, has to deal with one more this morning. Asian markets are trading flat to slightly positive, a little bit of mixed cues coming in from Asia, but a quick check on what Wall Street got up to an overnight trade. It was a significant day of trade in terms of record levels. Were met in yesterday's trade. The Dow, the Nasdaq, and the S&P 500 all went home with gains in overnight trade. Well, what caught our attention was also the fact that you had the Fed chiefs being explicitly clear that they aren't expecting more than 2 or 3 at best rate cuts in the calendar year. So that is one thing that the markets heard, didn't really react to. So I think that is what we're taking heart from. The world index, MSCI World Index, rose marginally 0.5% to its highest level on record. Apart from that, you also had crude, which was in focus. Now, there seems to be no signs of the war easing between Israel and Gaza, and that is what is keeping pressure on crude. U.S. supplies have risen, and that could be keeping the tap in terms of gains. But that's largely what the picture is this morning. Niraj, like I said, global cues, boring, but we like boring on some days, especially on a day like today.
Most certainly, but likely to aid sentiment on the upside. So very unlikely that there will be too much of a variation there. Maybe banks remain a bit quiet ahead of the policy, but otherwise, global cues not supportive. So I think that's the key thing. The good part is that when you look at quant indicators across the board, there are 2 or 3 that I follow and I look at very closely. None of them are indicating substantial downsides, even if there were to be a downtick. So let's assume that the indicators are wrong and there is some bit of a downtick that comes around. I don't think the falls will be very, very large. And I think this market has shown that propensity time and again that dips are getting bought into. Never mind how strong the case for a dip might be. So I think that's the key thing. Yesterday we spoke about how difficult to see major case for an uptick in IT. Now, viewers, look at what Cognizant has said in its call, and people determine for yourself whether IT remains a hope trade or a value buy. I mean, what Cognizant is saying, no change in demand environment, uncertain and weak discretionary spending in the early part of 2024. So for now, nobody's talking about the latter half, the early half. Weak demand trends. BFSI, the sector is burdened with high interest rates and clients are in a wait-and-watch mode, and hence a pause on discretionary spends. In fact, overall, discretionary spending contribution remains quote-unquote unknown. Now, if this is the case, sure, HSBC or some others might find some silver linings, but it's very difficult to make a case that, no, this is an informed call. At best, remains a hope trade, a bit of a pullback yesterday. Let's see what happens today. And the sector to watch before we get to stocks remains PSUs. I think that is the key thing. Yesterday on close, me and Samina marked some of those stocks which hit highs and were locked on a 20% upper circuit. Well, maybe, just maybe, what PM Modi had to say also had to do something with it. But just the kind of improvement that we've seen in the base functioning of some of these PSUs is quite stunning. In fact, hear him out as he speaks about the PSUs and how their net worth has moved up over the course of the last few years.
आदरणीय सभापति जी, आज जिस बीएसएनएल को आपने तबाह करके छोड़ा था ना, वो बीएसएनएल आज मेड इन इंडिया 4G, 5G उस तरफ आगे बढ़ रहा है और दुनिया का ध्यान आकर्षित कर रहा है। आदरणीय सभापति जी, एचएएल के लिए इतने भ्रम फैलाए, आज रिकॉर्ड मैन्युफैक्चरिंग एचएएल की कर रहा है, रिकॉर्ड रेवेन्यू जनरेट कर रहा है एचएएल, जिसको लेकर के इतने जो होले चलाए। और कर्नाटका में एशिया की सबसे बड़ी हेलीकॉप्टर बनाने वाली कंपनी एचएएल बन गई। कहां छोड़ा था, कहां जाके लगाया, हमने पहुंचाया। आदरणीय सभापति जी, एक कमांडो जहां नहीं है, एलआईसी को लेकर भी पता नहीं कैसे कैसे बड़े विद्वत्तापूर्ण बयान देते थे। एलआईसी का ऐसा हो गया, एलआईसी का वैसा हो गया, एलआईसी का यूं हो गया। जितनी गलत बातें एलआईसी को ले बोलनी चाहिए बोली, और तरीका यही है, किसी को बर्बाद करने, अफवाह फैलाओ, झूठ फैलाओ, भ्रम फैलाओ। और टेक्निक वही है, गांवों में किसी का बड़ा बंगलो हो, लेने का मन करता हो, लेकिन हाथ ना लगता हो, तो फिर हवा फैला देते, ये भूतिया बंगला है, यहां जो जाता है ऐसी हवा फैला देते, कोई लेता नहीं, फिर पैदा करके लपक लेते। एलआईसी क्या चलाया। आदरणीय सभापति जी, मैं सीना तान करके सुनाना चाहता हूं, आंखें ऊंची करके सुनाना चाहता हूं, आज एलआईसी के शेयर रिकॉर्ड स्तर पर ट्रेड हो रहे हैं।
It's interesting, Samina, from the time that he first spoke about PSUs, the PSU index is up 80%. I know Arvind Sanger mentioned that the market has rallied, but those stocks, from people being in disbelief to even astute investors like Ramesh Damani turning believers and making money is quite something.
I think, Niraj, what's going to be important now is how much of that is in the price.
Agreed.
Do we see this rally continue? I think those are a few questions to ask, right? So while the larger market is a buy on dip, are PSU still creating or offering that opportunity at this stage is something that is worth discussing.
Agreed, but yesterday Sridhar Sivram of Enam, no less, right? Again, an astute investor spoke about how PSBs still offer value, and if you look at power, for example, still there is value. So there are people who are still finding value.
Talking about PSBs, I think any hint of a rate cut from the RBI governor today will set a lot of these stocks on a further rally. So the next leg up for Bank Nifty will be coming in from any hint of a rate cut. Remember, Bank Nifty has been struggling. 47,000 has been an important level on the index, and participation hasn't come through all through the month of January and so far in Feb as well. But like we said, we're still in the thick of the earnings season. A couple of good earnings. Unlike yesterday, I've picked 2 good stocks and 1 good earnings. So, Niraj, you should be happy about that. We'll start with a good one. Tata Consumers, pretty fantastic set of earnings, to say the least. I think the markets will also be pleased. Revenue was up 10%. So they've recorded a 1/3 jump in profits, aided by higher demand for tea and staples during the festive period. Though, remember, the bottom line or the profitability was impacted by a one-time charge. The company recorded a profit with an exceptional item and a tax of 5.13 billion rupees in the quarter ended 31st December, up 27% from the last year. The company incurred an expense due to an acquisition-related cost, service expenses and business restructuring. Revenue from ops went up 10%. The business, which is the domestic business, Tata Consumer's key beverages segment grew 8%, with tea volumes up 2% amid sustained domestic demand. It also benefited from staples demand such as salt, despite higher prices compared to rivals like ITC, opens new tab to, according to analysts. So that's what you want to keep in mind. Starbucks as well, which is a global business, actually did pretty well. Recently in Jan, we had news about how Tata Consumer said it would be buying 75% stake in capital goods known for its Ching Secret and Smith's Jones brand for about 51 billion rupees. This, of course, is not fully acquired yet, but they also fully acquired the health product arm Organic India for 19 billion rupees. So all that led to a one-off exceptional loss on their profits. But all in all, good sort of earnings comes in the heel of Britannia, which actually posted not such a great set of earnings. Well, moving on from one good to one bad, as promised, Gujarat, Narmada, another disappointing quarter for the fertilizer major. They witnessed losses mainly due to complex fertilizer nutrient-based subsidy rate change, which was about 28%. Demand has been struggling. Margins have also come in under pressure. Revenues were down a whopping 22%, and margins have declined to come in at 4% versus 16% that we saw in the same quarter last year. So it's not looking good for a whole bunch of these fertilizer stocks. They've also, in yesterday's day of trade, seen some pressure building up. But ahead of budget, some of these sectors usually witness some buying activity. Apart from that, Apollo Tyres, we saw what JK did yesterday. Apollo pulling it out once again, rather hitting the ball out of the park. Good earnings from Apollo. Revenues were up, EBITDA was up, margins have improved substantially to come in at 18% versus 14%, and profitability was up by nearly 79%. So great numbers from Apollo, good numbers from Tata Consumer, not so good numbers from Gujarat Narmada.
Okay, and you might accuse me of being completely bullish, but look at the numbers that have come in, Samina. You can't help it. I mean, three outstanding numbers, large, mid, small. Okay, so Lupin. I mean, this stock doesn't, or this company doesn't put a foot wrong in the last 12 months. Hardly any USFD observations, clean as a slate. I mean, just lovely performance per se. And this quarter too, revenues up 20% at 5197 versus 4861, a 20% revenue growth. Margins up 764 basis points, 19.97% versus 12.32%, and ahead of the Bloomberg estimate of 18%. Yes, it was estimated to be higher, but they've beaten even that, as a result of which the profit after tax looking so solid at 613 crores versus 153. Yes, the stock has rallied a bit relative to peers, but with reason. But this is a really strong set of numbers for Lupin, and won't be surprised to see some further upticks there. Cummins was a really strong number too, and a lot of conversation around whether Cummins growth is front-ended right now in FY24, and could the second half be weak? Well, I think they are dispelling those notions. Revenues up 17% ahead of estimates. Margins up 281 basis points at 20.35 versus estimates of 16. By the way, the poll was 16%, so much ahead of estimates. Net profit at 20.5% higher, so very strong numbers on there as well. And the third one on my radar, before we move to the others, is Piccadilly Agro, the manufacturer of Indri whiskey. Now, this stock has had a really strong run. Let's pull up the run for Piccadilly Agro first before I go to the numbers and quickly just see how the stock has done. The stock has been on a tear, literally, the last 3 to 6 odd months, because people have recognized an Indian brand going global and the value of that, I presume. Now it is showing in the numbers. So look at the Piccadilly Agro, 3 months, 27%. Now look at the numbers. Revenues up 55% at 191. EBITDA up 95%. Extremely strong showing. Margins at up 362 basis points on that base, as a result of which a nearly 6x jump in PAT to 44.89 versus 6.92. The previous quarter was depressed as well. And just before I get to Samina for the other stocks, keep in mind what Piccadilly Agro has done in quarter 3 is double PAT of what they've done in the first half for the company. Yeah, so quite stunning a performance. Won't be surprised if this stock too has an uptick. A lot of other stocks though, but Samina, anything else on your radar?
You were talking about how Lupin hasn't had any observations on that same
Largely,
note. Largely, it's Piramal Pharma this morning that might be facing some pressure. They, of course, had an FDA inspection concluded and have been issued a Form 483 with 3 observations. The observations were classified under VAI and do not relate to data integrity. But again, important to watch, the stock will be under pressure on back of this Form 483. Talking about a little bit of disappointment, Soba's numbers didn't look as spectacular as some of its peers like Brigade Enterprise have managed to post. Revenues were down, EBITDA is down, margins have also improved slightly, but in terms of the kind of sales that they're doing and the fact that projects are not being concluded fast enough is what could, impact Soba and early trade. Sure, Niraj, I know Soba's supply will come on track, but the fact that they are facing some resistance in project completion, unlike a Brigade, for example, same market as well, same geography, Soba may get a thumbs down this morning. Yeah,
very likely, and it remains to be seen. What may get a thumbs up, though, Samina, aside of the others that we've spoken, is Star Cement. Yes, the revenue numbers are kind of single digits and in line with estimates, but the EBITDA performance very strong. Yet another cement company which impresses on the margins. 527 basis points uptick in margins to 22.8 versus 17.6%. And the PAT up 40% at 73 crores versus 52 crores, much ahead of estimates. So Star Cement could be the other one that could be in focus. And off numbers, I think 2 stocks stood out for me. One of them is Mangalore Chemicals or Paradeep Phosphates, as the case may be. The merger has been announced. And the swap ratio has an 18% arbitrage in favor of Mangalore Chemicals. So suffice to say, Mangalore Chemicals will definitely start off higher. Does Paradeep correct a little bit in order to remove this arbitrage? Who knows? But they are funny. I mean, Inox Wind and Inox have a 40% arbitrage.
That was a beautiful trade that played out.
Yeah, so watch out for Mangalore Chemicals today. And Samina, watch out. I mean, aside of Adani Ports, which has won a bid to operate the Tanzania container terminal, it's quite interesting. Israel, Greece, Sri Lanka, Tanzania, Adani Ports is spreading its wings, so watch out for that. But from a stock perspective, Welspun Enterprises, $500 million water treatment plant contract. This one could be very strong today as well.
And we'll try and talk to the management at some point to understand the timelines, payment cycles, and what this project really means for Welspun Enterprise. 2 smaller companies, but worth the mention. Relige Enterprise, they recorded a profit of 33 crores against a loss of 95 crores in the same quarter last year. Quarter on quarter, though, the numbers don't look so great. Revenues have declined and profitability has also come up. But on a year-on-year period, we have seen an improvement. Now, this could be on back of an exceptional item that last quarter could have witnessed. So that's Relige, and Ashok Bilcon as well reported a profit of 110 crores, falling 20% from the last year. This was impacted by low operating margin and a sharp increase in input costs. The stock was up 2% yesterday ahead of earnings. This morning, though, a gap down cannot be ruled out. So those were, of course, the big earnings, the broader market earnings as well, that the markets and investors and traders will be reacting to. But the bigger cue, the bigger direction will come from none other than the man of the day, which is the RBI governor, who will, of course, take us through the monetary policy outcome later on in the day. Rates, remember, are expected to remain status quo, but what the street will be watching out for is the tone, the stance, and more importantly, the liquidity setup, along with, like Niraj said, Paytm questions that the governor will land up taking. But let's listen into what the RBI governor had to say.
You see, immediately after the Ukraine war, our headline inflation had touched 7.8%. Now, thereafter, because of the monetary policy actions which we have taken, which was also supplemented by, aided by the supply side measures taken by the government, inflation has been steadily coming down, and we are on our way to reach 4% target. But next year's average is expected to be 4.5%. The positive aspect of it is that our inflation is now well within the target band of inflation, but we are not satisfied with that. We would like our inflation to reach 4% and remain around 4%. Just let me complete that bit. So therefore, that is our endeavor. And the core inflation, the core inflation has now come below, marginally below the 4% headline target. So we expect next year's average inflation to be 4.5, inflation to steadily moderate towards 4%.
All right, welcome back. And in fact, we're talking about the RBI policy on today's editor's cut. This is where we break down the big headline, of course. But as today is an important day, we have a guest editor, if you will, joining us in the studio. We've got Lakshmi Iyer, who is the Chief Executive Officer, Investments and Strategy, Kotak Alternate Asset Managers. Of course, we've also got Niraj and Samina, who are the perennial editors on this show. But let's talk about monetary policy. And status quo, I think, is the given, right? Every economist polled by, any Bloomberg or Reuters said that that's not changing. What do you look forward to, though?
Well, Alex, if RBI has decided not to give a holy gift to the markets, then it's going to be a status quo for sure. And I think that's exactly what our view is also. But I think the crux today will be two things. One is there going to be a stance change? I think that's debated and that's not really fully priced into the market right now. And is there going to be anything more explicit on the liquidity front? I think these are the two key things which markets are keenly watching toward. Otherwise, yeah, you're right. I mean, status quo, it is like...
On that liquidity thing, and I'm sure Samina would also want to weigh in here, you saw a few instances where the call rate over the last couple of weeks went below the repo rate. What does that tell you about liquidity as things stand?
So, liquidity has actually been oscillating between going into a negative zone, coming back into neutral, going again into the positive zone. So, as recent as yesterday, the durable liquidity in the system is still about 1,50,000 crores or 1.5 trillion rupees. So, if you look at the trend, what RBI has been trying to do is it's been closer to the upper end, which is the MSF rate, for quite some time. Very recently, it's coming, it's toggling between the repo and the MSF. So I think the narrative could be the same that, we don't really want it significantly lower, but at the same time, we are ready to act. So RBI has been constantly doing a combination of VRR and VRRR to ensure that the band is maintained. But you're right, from a higher end, going towards the 6.85-7% region has actually come towards the repo rate. And I think that's where it's going to be toggling around for some time.
Lakshmi, I just want to take a step back and then talk about liquidity. I mean, I know the markets, economists, everyone talks about a rate cut, but actually growth has been pretty good. The NSO has projected 7.3 for the year, 7% for the next year. Why are we getting greedy then? I mean, why a rate cut in that case?
So a couple of things. One is, and this is what most economists usually look at, is what is the real rate? What is the nominal rate you are getting? What is the inflation in the economy? And when I say inflation, not today's inflation. What is the inflation likely to be 1 year hence? A projection, and therefore what should be the optimal rate? So from that metrics, in fact, the interesting point to note is if you look at the way we have Fed fund futures in the US, if you look at the swap prices in India, interest rate swaps, is actually indicating a 50 basis rate cut by August. Well, I'm not subscribing.
And this is irrespective of what the Fed does, because we can't move before the Fed does anything, and that will lead to rate cut.
Ideally, we shouldn't move before the Fed, because that's the, I would say, Niagara Falls for the economy. So, yeah.
But what if? I mean, would you anticipate that an ideal conditions notwithstanding, there could be, because of domestic reasons being conducive, a rate action by the governor in order to spur growth? Because post the budget, almost every opinion was that now the ball is in the court of the Reserve Bank of India to not disappoint and give the leg up that the growth might need.
Fair enough, but I will look at it from a different metrics. If you look at the credit growth in the system, maybe it could slow down a tad, but I think we're already in mid-teens to a little bit high teens, depending on which bank you're looking at. So that's number one. Some slowdown is inevitable. So the segments which require growth anyways are getting, that kind of capital. That's number one. So therefore, and it's also imperative to keep in mind the forex dynamics. You can't be, a deficit nation, which is current account, fiscal deficit and trade deficit, and look at easing interest rates when the mother of all economies has not yet started moving.
Okay, just a quick follow-up there. Sorry, Alex, just one question. You have a country which is showing a glide path which seems to be very, very believable, obviously so, because they have overshot what they promised. CAD is largely probably not a worry. It used to be a worry some years back.
Absolutely.
At 1.3, 1.4, maybe not a worry. And you have a country which is saying that, hey, we are the large growth country here, but we're not satisfied with the 6-7%. I really like to do more. can the Reserve Bank also play ball now that the government has done its job? So therefore my question, can the Reserve Bank do something which is ahead of the Fed or not advisable or not believable?
It's possible. No, it is believable, it is possible, but is it immediately a pragmatic solution? The answer is, it's still kind of in that Madhya Marg, as I call it, purely because we cannot, as a global perspective, we can't completely claim victory over inflation yet because commodity prices are docile right now, but you don't know what the dragon is going to do. So China can stimulate.
But having said that, you have yields that have come off in any case across the board, right? In India, you have the 10-year that is at, less than 7.1.
That's right.
And so borrowing rates for corporates would naturally be lower. Wouldn't that be the case?
Well, the curve is actually inverted. Typically, the curve is supposed to be like this. The curve is inverted, stroke flat, because the shorter end rates have shot up and the longer end. So somebody, if a corporate comes to borrow 1 year money, people are slightly reticent, but to give 3 year money, they are more comfortable. That's what the markets are telling you.
One last bit from my end, I'll of course toss it back to Samina, but we're hearing from more Fed officials, and because we're talking about that perhaps being one of the factors that will weigh on the RBI's mind, talking about pushing it further, pushing the rate cut further to May. You had Neil Kashkari of Minneapolis talk about 2 or 3 rate cuts being appropriate. Now, that's of course much less than the market is expecting. What's your base expectation?
Yeah, so I think that recent even Powell statement that we read is talking about guiding the markets towards 3 rate cuts. But I think closer home for us, what is relevant is that do you have reasonable liquidity to fuel the growth? Well, I think that is where RBI's focus is going to be more. And when the markets start pricing a rate easing and you have the support of FPIs, I mean, that's the biggest Brahmastra today. 6 months of consistent buying. When have you seen
bonds,
this?
And with the JPM index inclusion, it's only going to get better. Just a quick...
I know what Samina's question is going to be.
No,
I'm
it's
laying
inflation.
A bet on it.
It's inflation
Oh,
this
is that
time.
so? Okay, I'm sorry.
So, Lakshmi, help me understand this. So, core inflation came in at 3.8%. Now, that's a little bit of comfort. If we get closer to 2%, this becomes bad for the economy. It becomes disinflationary. But food inflation is still elevated.
Yeah.
Non-veg inflation, when I say non-veg, I mean non-vegetable inflation, has been on the uptick for the last 4 years. So it's a very tight rope for the RBI to walk, given that the only inflation they can really control is core, and that's not what you want to impact.
Yeah, but then RBI still looks at the headline numbers and the world looks at the headline numbers.
But the core keeps dipping and then you bring your headline down. This is not going to be good for the economy either, right?
But inflation is not just going to be controlled by the monetary policy. It's also fiscal policy.
But the RBI is going to do monetary, right?
Yeah, but it's a combination of factors always, and the government has stepped in multiple times over the last 6 months.
What do you think is going to happen in that case?
As I said, there is no cookie cutter answer to it, and I wish, even if we were sitting at the RBI's hot seat,
we'd still be confused.
Not really hot, it's freezing cold out there. But genuinely, yeah, you're right. So, core is definitely one metrics. In fact, some of them also track core, so they exclude some of the elements from the core inflation also. But the reality is that, and food prices will be oscillating.
Yeah.
But I would say that it's important for us to track, that 4% plus minus 2 is now more gyrating towards the 4% mark, which we are today 100 basis points.
So is that
higher.
what you're expecting in terms of inflation commentary?
Inflation commentary, I think, may be unchanged because crude oil prices from the previous policy to now has just barely inched up about $3 or $4. So it's not really a big bummer for now.
Okay, I'm asking Samina's question. I know we are short of time, but just one quick question. Do you buy duration?
Well, I would.
You would?
Yes.
Also, one follow while we're at it. What's the take on currencies? Because if we do expect some liquidity measures, I'm guessing with the VRR will come FX swaps as well, right? You've got the JPM inclusion. That might disturb the dollar-rupee pair, even though you've got the invisible hand. Anything on the dollar-rupee pair?
So in Bollywood terms, I will say, Samina, our currency is actually a fighter because if you
It is a Shah Rukh Khan, huh?
Absolutely.
No, it's a
sorry, it's a Ritik. Clearly, I'm a Shah Rukh fan.
You're talking about Pathan.
You're talking about Jawan.
Jawan.
Yes, but it's a Jawan and a fighter because I think it's braved the entire last 2023 pretty well, and looks like we are going to be in a tighter zone as far as the rupee depreciation is going to be concerned, because incrementally the metrics are only looking better. So I think those 2.5-3% depreciation is passing.
Yeah. All right. So on that note,
Sorry, just wondering, were we being sexist? Why can't fighter be Deepika Padukone?
No, of course. No doubt.
Yeah, exactly. It's a 50-50 house. And he's got to spend the next hour and a half
I must
with me.
say that they chose Shah Rukh
Exactly.
as well.
Yeah.
Thankfully, we are in the safe seat.
So it's not sexist at all. All right. On that note, where we've equated monetary policy and indeed the movement of the currency and the bond market to Bollywood, well, who knew that that could be possible? We have to slip into a very quick break. There's more on the other side. Do stay tuned.
Back with India Market Open right here on NDTV Profit. Pull up the implied open and just see what that is doing in this, what is indicating in the session. Remember, the S&P 500 is just 5 points shy of that 5,000 mark. So the global markets have done well. We are likely to start off well. What are the cues for the morning on the derivatives side? A segment that we do like none other. And my colleague Agam is waiting by for that. Agam, good morning.
Good morning, Niraj. I'm going to start off with the kind of cues that we are seeing at the moment right now. And well, yesterday's day of trade was a quiet one. at least as far as the Nifty is concerned, and maybe traders were a little more hesitant to take positions before the RBI monetary policy decision. Of course, we are expecting status quo, but there'll be a lot more commentary coming in that perhaps could determine the course for the markets going in. The Nifty yesterday was as flat as it could be, very little change in open interest. The Bank Nifty futures, on the other hand, had a little bit more action. In fact, good 6% added in open interest, even as the underlying advanced by 0.3%. In terms of the options market, remember, today is the weekly options expiry for the Nifty as well. So considering the MPC, where there could be some choppiness coming through. That said, at the moment, in terms of your overall open interest distribution, on the higher end, we are looking at a lot of open interest building up around 22,300 and 22,400 calls. On the lower end, while we have max OI around 21,900, well, if you were to go with the kind of traction we have seen of late, 21,700 cannot be discounted as a little bit more of a, a stronger support, so to speak. Let's talk about stocks then. And, well, of course, this is, of course, your change in open interest where we haven't seen too much determination, in terms of, direction, at least at the moment. But in terms of stocks, we're keeping an eye on Delta Corp, Balrampur Chini and Trent. Trent, what a staggering up move in the latter half of the session. Up as much as 19%. So keep an eye on that one. And in terms of stocks, we saw unwinding. Let's talk about that. We have short covering in Chambal Fertilizers, HDFC Life, Pidilite and Dr. Reddy's. So a whole host of stocks to keep an eye on in today's day of trade. But of course, it will also be about the interest rate sensitives. And, we could perhaps see a reaction there as well. But what are we making of the data in the markets as far as the derivatives action is concerned? Let's get in an expert for today. We have Aditya Arora of Analytics Research joining us on the show. Aditya, good morning. Thanks for joining in. Let's start with your view on the benchmarks, the Nifty and the Bank Nifty. What would you do with them?
Very good morning, Agam. I think markets are positively poised at the open because you can see good leadership from IT stocks. Because yesterday also Nasdaq rallied quite a bit. So I think positive sentiments could spill over in Indian IT stocks. And we saw a stellar rally one day prior to that in a lot of large caps. So I think that could take Nifty to higher levels. But we also have event today. So over there, I am a little bearish on that side. I think banking space still looks bearish. If you look at HDFC Bank, then we are not seeing any strength so far. So bias over there is neutral to bearish. So I think there's a cocktail of, positive and negative signals over here. So I think if we take a little longer view, like 1 week or so, then I think there's more downside than upside. And to be conservative, if we take 1 month view, then I think there's more downside from here than upside. So I'm a bear at this point in time, looking for the right time to short the market.
Okay, bear at the moment, looking for the right time to short markets, especially the Bank Nifty, which looks relatively weaker as compared to the Nifty. That's the view on the benchmarks from Aditya. Aditya, but you also have, any trading ideas that you can give us this morning?
Correct. So as the market looks little overextended, so I think defensive bets could be a good idea to go long. So in that space, I like Oro Pharma. Over there, 990 put can be shorted at 45.80 and 970 put can be bought at 29.75. Max loss over here is 4345 and maximum profit is 17,655. Second one is from banking space. As I said, I'm little bearish in banking space. So SBIN can call 670 call can be shorted or sold at 21.85 and 680 call should be bought at 17.10. So this is a bearish strategy and maximum loss over here is 7875 and maximum profit is 7125. I think Nifty PSU index is pretty overextended. We can see correction of 2 to 5% over there. So I think SBI is a good short candidate from that index.
Okay, so one long and one short. That is what we are getting. Aurobindo Pharma positive. SBI negative. That's the word coming in from Aditya Arora. Aditya, thank you so much for joining us and taking us through your views on the markets and also giving us those couple of trading ideas. And with that, it's back to you, Samina.
Thank you, Agam.
I just wonder, Samina, could it be a risky bet to have a trade on a PSU bank like SBI today ahead of policy?
Ahead of policy, pardon me.
Also because remember the stock did really well day before yesterday. And today
and yesterday as well.
Yeah. And if the policy has some dovish undertone, then it might just help the PSU banks as well.
Yeah,
right?
and if it's status quo on every front, then you might see a huge selling that may potentially come in, because you see a lot of these PSBs have been gaining post the budget precisely. In fact, the expectation of their debt, their bond yields easing, positive impact on their book has what's led to a lot of these PSU banks doing quite well. It'll be exciting to see how things play out in opening, whether or not traders would be brave enough to take a trading stand on some of these banking names ahead of policy. But I think there will be enough and more bravery out there. You've got great earnings coming in from Lupin. Once again, a fantastic quarter. They've beaten the most optimistic expectations. Monal is joining us with more on that. Monal, another fantastic quarter for Lupin.
Thanks, Samina. Yes, after I think the last year, Lupin's getting back on track. Profits have tripled over last year, which is, mind you, way above the average expectations of the street. This despite some bit of a build-in from a deferred tax credit which has reversed. But overall, a strong show. Margins have come in at around 19.97%, while the management had guided for an 18% for the year. So again, an outperformance on that beat. Overall revenue, EBITDA, all of them are a positive. Nilesh Gupta, the managing director, said that this is their highest ever sales that was registered in the quarter till date. So quite a good set of numbers. India revenue up 13%, US strong show at 24% growth year on year. And both of these geographies make up for a total of 70% of Lupin's revenue. So again, a positive. Rest of the world's sales have shown a growth of 71%. More details are likely to come in once the call happens, and we're having a discussion with the management later in the day. So we'll be there to share those details with you.
Follow up. We were just talking about it on Trade Setup, Samina and me, that amongst all the pharma companies which have gone through some FDA hurdles, etc., Lupin has been the one which is kind of relatively had the cleanest record with regards to the US FDA. Is that also playing out because all its plants are operational and they are doing very well? Because it's not that we are seeing pricing power save for Revlimid for everybody else. So what is it that's working so well for Lupin, not just this quarter, but the last many quarters?
Yeah, I think they've also come up with a lot of cost optimization that they've done through the year, and they've gone ahead and cleared all their one-offs as well. The plants are clear, like you mentioned. So all in all, things are shaping up well for Lupin now. Of course, what do they guide on their future launch pipelines is something that is yet to be seen, but looks pretty strong and positive.
Okay. Thanks a lot for that. Monal. So that's Lupin, but there are more earnings on our radar, and Harsh Sehta Johnson with the details of some of those. Harsh, which are the other ones aside of Lupin which stand out today?
Well, yes, morning Niraj. So first off, I want to highlight Cummins India. Strong set. You're looking at revenue which is up 16.5% on a year-on-year basis. Your margins have gotten 36%, or rather your EBITDA has gotten 36% better versus last year. That's a big one, and therefore margins have gone up by almost 280 plus basis points on a year-on-year basis, which is 2.8% in absolute terms, coming in at 20.4% now. Your net profit therefore has surged 21%. It's a strong set coming in from Cummins India. The other two I really want to point out is one, Tata Consumer. A couple of one-offs, but outside of that, I'll read the numbers. First off, revenue is up roughly 9.5% on a year-on-year basis, largely in line with what expectations were. EBITDA has jumped 26% year over year, and therefore margins are up roughly 2% year over year. So you're seeing a margin which was at 13% come in more at slightly higher than 15%. So you've seen a solid margin uptick. Profits have gone up by roughly gone down by roughly 17.5%. I stand corrected there. But that's because of a one-off, a 90 crore one-off exceptional item, largely because of the takeover of Ching's. And that is why profits came in lower than estimates. But if I exclude this exceptional item, profits are actually higher than estimates. So keep your eye out on that one as well. Last off, you have Apollo Tyres. Good set of numbers. Your revenue was up just about 2.5%, but your EBITDA has gone up by 32+% on a year-on-year basis. Your margins have gone up from that 14% level to 18.3%, and your profit is up 78% year over year. That's one to look out for as well today.
Right, Harish. Thanks for that. So there are lots of good earnings that the markets will be reacting to. Cummins being one of those. Auto Ants has done exceptionally well. So we saw JK Tyres yesterday, Apollo Tyres this morning. Good earnings. Markets will reward some of these counters. And even with Lupin, like Niraj and Monal both indicated, it's been a strong quarter. They've quarter on quarter delivered. There has been operational efficiency. Sales are looking good as well. No inspections, and I think that, or observations rather, is what's garnering. Well, and investors have recognized that, and we've seen that in the stock price. But beyond earnings, like I've said, the markets will be largely focused on the RBI governor today. It's all eyes on what the governor does. No changes in policy rate is expected. What though the street is divided on is whether or not there could be a change in tone or a stance by the governor. If it turns a little more dovish, like Niraj said, you could see a breakout rally on banks. Bank Nifty, remember, has been struggling for cues in the last few days. It's not really been able to break above levels of 47,000, and that is going to be an important mark, at least on Bank Nifty, with regard to what we are seeing today. So expectations, I think, somewhere are there. It's just very obvious in terms of what PSBs did yesterday, day before yesterday, and Bank Nifty as well.
Yeah, and we'll be there at ground zero as well, Samina. Asking questions to the MPC and the RBI governor. Our colleague Vishwanath Nair is banking editor, Johnson right now from right outside the place of action this morning. Vishy, all eyes on what the MPC says, if not what the MPC does. Trying to understand what would be top of your mind in the press conference.
Right. So as you announced, the RBI, the MPCs met over the last couple of days, and today they are going to make the latest monetary policy announcement. Now, remember that the expectation far and wide is that they are going to hold rates again. This will be the 6th time that the MPC holds the benchmark interest rates, as well as maintains its stance as far as accommodation of previous sort of accommodations are concerned. So removal of those accommodations. So that stance is likely to continue again. What will be important, as you said, is what the MPC says versus what it does. So what it will say is likely a dovish stance. That's what economists are expecting, that at some point in time after April, you will start seeing rates coming down. Remember that the benchmark repo rate has been set at about 6.5%. So over the last 6 policies, that's where it has been continuing. So if there is any indication of a rate cut coming anytime soon, then that becomes an important point to note. Now, remember that in December, when the CPI numbers did come in, they were slightly higher than the 4% target, about 5.69%. So that will the eyes will be on what the RBI and the MPC view as the future sort of trajectory of inflation. January data is still pending. That will come in maybe next week, and that's when we'll know whether the inflation trajectory has come down at all. During the last policy, the RBI said that it will come closer. Inflation will come closer to the 4% target only in the second half of FY25. So we need to see whether that undergoes any kind of change, any kind of outlook on growth. The second point that the MPC and the RBI's commentary will focus on will be on banking sector liquidity. Now, liquidity was in deficit for a pretty long time, but since December, since the last policy happened, things have eased a little bit. Remember that right after the budget, the government is also likely to spend a little more because they still have to meet their spending target, which they will achieve by March. So therefore, there will be some improvement on the liquidity scenario, but we need to see what the RBI says it will do. Remember that they have been also conducting variable rate repo auctions regularly to maintain short-term liquidity. Now, aside from all of this, one important question that will be on everybody's mind, every single reporter that I've spoken to is expecting to ask this to the RBI governor, that is with regard to what is happening at Paytm and Paytm Payments Bank. Now, these things are, of course, not rate related, but these are important regulatory decisions. Just a few days ago, the RBI put severe restrictions on Paytm Payments Bank on conducting future transactions. February 29th is the date after which there will be no further deposits allowed into Paytm Payments Bank account, which puts this large sort of fintech entity in sort of jeopardy. So we need to see whether the RBI gives any further clarification, any kind of indication as to what they want to do with Paytm. So these are three things. First, on the rate trajectory. Second, on the banking sector liquidity. And the third, on what happens to Paytm going ahead.
Liquidity and Paytm, those are the key factors you want to watch out for in terms of the policy which will come in at 10 a.m. this morning. Yes, we're not talking about a rate cut, we're not talking about a stance, we're not talking about a tone, we are simply talking about liquidity and Paytm. It's a different sort of RBI meet today. Well, talking about the markets, a quick check on the implied Nifty. We're getting closer to pre-open trade. It's going to be a sideways morning. Yesterday also the markets did lack some excitement, spent most of the day consolidating. This morning expected to start about levels of 22,000. Shrikant Chauhan, Executive VP and Head of Equity Research at Kotak Securities, and Pankaj Pandey of ICICI Direct joins in. Shrikant, I'll start with you. What's the trade on Bank Nifty this morning, if any?
Good morning everyone. I think, the Bank Nifty is forming some interesting formation. If we see the line chart of the Bank Nifty pattern, which is currently we are seeing on the screen, one thing is very clear that it is consolidating close to 45,500 levels, and it's a formation which is indicating us that it's a inverted head and shoulder sort of formation. So it is under the process. It has not broken the neckline resistance, which is the most important requirement to validate the formation. But based on the formation, at least we can expect a gradual rally towards 47,000 levels. So from 45,500 to 47,000 is a decent rally that traders can expect in the near term. And today it's an event day. So I think 45,500 should be the final stop loss for holding any long position on Bank Nifty. Also, if we go through with the index heavyweights, then SBI, which was consistently underperforming, is now into that breakout mode. So from here, the State Bank can also move to the levels of 700, and maybe because of that, we can expect activity in other heavyweights. So broadly, we are of the view that Bank Nifty should do well in today's date. And for Nifty, I think there also there are like furthermore legs to move towards the levels of 22,150.
Okay, well, lots of earnings to digest. But before that, Shrikant, can we have your stock recommendations for the morning?
Yeah. As I mentioned, State Bank is into a breakout formation. So the next level to watch out for would be 700, 710. Currently, it is around 674, 675. So it's a buy at current levels with a stop loss close to 660 on the downside. So 660 should be the final stop loss for holding any long positions. We are expecting minimum 720, maximum could be the fundamental value, which is around 750, 760. The other stock which we like is Indus Tower. And after a very long time, we are seeing again activity in Idea as well as in Indus Tower. So based on its technical formation, Indus Tower is heading for the levels of at least 240-45 in next maybe 1 or 2 days of time. So not in the short term, but yes, with a positional view, buy at current levels with a stop loss close to 214.
Pankaj, are you constructive on PSBs? Post the budget, we've seen some buying that's emerged in a bunch of these PSU banks. At this stage, are you tactically going to go out and buy PSBs?
Yeah, hi, good morning. Thanks for having me. I think, overall, our sense on the market is that PSUs are looking quite attractive, not only banks, even the rest of the pack. Now, within banks, what we have seen on the budget day, interim budget day, the yields had sort of declined by 7-8 odd bips. And our sense is that this year we could see a yield decline of about 50 bips. Obviously, that should help or that should get triggered with the rate cut anticipated in the second half. For a bank like, say, SBI, our sense is that 50 bips kind of a decline in yield pushes their profit, FY25 profit by 10%. So PSBs is something which we have been liking. SBI is our top pick. Our target there is about 800. I think overall, this RBI event is likely to be a sort of a more of a non-event. But our sense is that if there is any change of stance, especially on the liquidity perspective, I think that will be the key event or key trigger for these PSBs to sort of do even more better. Because our sense is that if that leads to sort of yield decline, the overall profitability sort of improves for these banks. I highlighted SBI from that perspective. But overall, our sense is that within banks, PSBs are looking a lot more attractive. I think private sector banks will take some more time to sort of perform, but till the time we don't get FI inflows.
Pankaj, a lot of results today. Did you like any of those for a further investment? Let's say between a Lupin and a Cummins, two large ones. Are any of them on the back of the results worth looking at?
So, Niraj, Lupin definitely looked very good. I think one is after a gap of, say, 9 quarters, the EBITDA margins have inched up to 20%. And I think growth is quite broad-based, especially when you look at the US market or the Indian markets. And so from that perspective, a company has come out with good set of numbers. I think we need to sort of check if these margins are sustainable. Then we would be constructive definitely on Lupin. Cummins, we don't track.
But Cummins had a very solid quarter as well, so that's to be kept in mind too. So watch out, because the margin performance was very strong and lots more happened there. So that's the other set of names to watch out for. You know, smaller name, Piccadilly Agro, and that did really well too. So that's to be kept in mind. And Apollo Tyres did well too, in addition to Star Cement. So Pankaj, 3 more names. I don't know which one do you track, so I'm throwing all 3 at you. You can pick one. But tell us about them. Piccadilly Agro, the maker of Indri Whiskey. Apollo Tyres, which showed a margin expansion. And Star Cement, again, margin expansion. Even though for Apollo as well as Star, the revenue growth was single digits.
So I think for tire companies, Niraj, I think what we have seen is that overall the margin profile has been quite better. And for Apollo, 18% of margin is one of the highest we have seen. And it's not only the domestic margins which have been good, even the overseas margins have also been good. So I think tire is one space where we have seen a good amount of rally. I think valuation-wise, it's been on a higher side, but we would sort of look, or we would become a lot more constructive if we see some kind of a correction there. But tire as a space looks sort of quite attractive to us. Although our sense is that going forward, the CV cycle is going to sort of be quite robust. So obviously the ancillary demand in terms of tires is going to be good. Only thing is, I think a lot of these stocks have run up quite fast.
Right. That is the word coming in some of those counters that posted earnings. We will take a quick break. We'll come back. While we do that, listen to BPCL's Managing Director speaking to NDTV Profit at the India Energy Summit in Goa about the company's green transition plans.
3 or 4 steps which we'll be taking on green energy business. One, we'll be going big on petchem business. That is what we are investing about 49,000 crores in Bina. Second, we will be continuing with our gas business. We have got 50 GAs across the country. So we will be going very big on CGDs. Third, we will be going on green hydrogen. And fourth, we will be looking at biofuels, EV and CBG, which will be very, very big for us. So these are our plans for the future, but these are very early days. We are looking at small steps in the beginning, but we intend to scale up big. So in the next 5-7 years, we want to spend about 150,000 crores only on the new projects, and about 1 lakh crore over 10 years for net zero ambitions which we have. We have defined net zero for us in 2040. We will be scope 1 and scope 2 net zero.
They are your guests of the show that you're at.
back. We're gearing up for trade this morning in conversation with Pankaj and Shrikant. Shrikant, what's the trade on Lupin? Expected to see a gap up on better than expected earnings?
Yeah, absolutely. The way the performance of the stock since last almost 2 quarters or 3 quarters, one thing is very clear that the stock is heading higher and it is on the verge of crossing its maybe previous high. But at least the way there was like underperformance since last few months, I think it is on immediate basis heading for the levels of 1800, and eventually it will cross its previous high, which is based on its technical formation. Based on valuations, yes, currently it is expensive, but if there is any correction, we should look for adding these stocks. We are specifically bullish on it. And if there is any correction, then I think close to 1550, 1540, we should be a buyer. But on the higher side, 1800 and next level could be 2200.
Right. Anything on? Okay, that's the pre-open right there. We will give it a few minutes. It's a little over the place in terms of the Nifty and the Sensex, indicating to a flat to slightly lower start for now. But like we said, it's going to be all about stock-specific trades. Shrikant, we've already asked Pankaj if he had any thoughts on Apollo and Cummins. You want to come in on both those counters? I mean, JK had a good run on back of earnings. Apollo as well this morning has reported a strong quarter. Would you look at buying Apollo maybe for an intraday move?
See, out of these two stocks, Cummins looks really a very strong candidate to buy for, because the stock has delivered stellar performance in Q3 on the domestic side, also on the growth as well as on the margin, which is like something we always try to see in the stock. And if that is there, then we try to upgrade that particular company. So after like hitting these levels, we are expecting now the stock is moving towards the levels of at least 2700, 2750 in next maybe few weeks or few months. So it's a buy at current levels with a target of 2750. But if there is a very short-term view, then keep a stop loss at 2350 for holding any long positions. I think the targets are safe.
Okay, the first 1 minute is showing some great signs, but let the rate settle for a clutch of these stocks and then see what happens. You know, amidst things that did really well over the last couple of days, yesterday, green energy stocks had a big move. Adani Green was up about 8%. Suzlon and Inox too did okay. And to this morning, we've learned that Inox Wind has bagged a 1500 megawatt order from CESC. Now, this is obviously over 3, 4, 5 years as the case may be, but that's a large order that comes in. I think that's the reason why it might be showing an uptick. I don't know if it shows up 7, 8% or not, because these rates will settle. But it clearly is a fundamental positive news for Inox Wind as well as for CESC, by the way, because I think it gives visibility towards the going green plans that CESC had, and maybe which is why CESC too could be active. Now, Pankaj, come in on Inox, Suzlon, maybe Adani Green, maybe some of these, whether wind or solar, but these companies are in the right space at least, right? Because the tailwinds are there. Which of these fundamentally warrant a look at?
So, Niraj, don't cover these stocks fundamentally, but what we have seen is for both Suzlon and Inox Wind is that they've been launching new turbines in the range of 3.3 to 4 megawatt. And obviously, these are far more efficient ones. And given the fact that there is going to be a very strong focus on renewable energy going forward, be it solar plus wind, I think these companies are definitely at the right place. What we like from the overall renewable energy space is NTPC. I think this is one stock where the relatively, compared to private counterparts, the valuations are still quite sober. And this company has got the balance sheet to sort of scale up to 60,000 kind of a megawatt, which is what they've been aspiring for. So I think this stock looks quite attractive to us. I have, like I said, we don't have fundamental coverage on the rest of the pack, so I'll not be able to comment on their respective target prices.
Okay, fair call. Here I'm using Inox and Inox Wind or Mangalore Chemicals, and we'll get Varsha, my colleague, to talk about that. Mangalore Chemicals and Paradeep Phosphates, those are the other two stocks in focus as a case in point, wherein there is an arbitrage because of a swap that has been announced. and wonder what stocks do. Typically, when such an announcement comes in, let's say in case of Bangalore Chemicals, it would be up 10%, maybe Paradeep could be down today because the arbitrage range is about 18%. No, Paradeep 2 is up about 5%, so very interesting there. But Pankaj, what's happening here? Let's say Inox Wind and Inox Wind Energy. They are going to be merged. The ratio is known for the last 6 months. There is a 40% arbitrage. If you buy Inox Wind Energy, which is the holding, but it's going to be merged, there is a 40% arbitrage that you have if you were constructive on Inox Wind. Why does this exist?
So, Niraj, we've not been covering this stock fundamentals, so I will not be able to.
Fair call. Never mind. But you know, okay, this is an interesting play out there. The other set of companies is Star Cement. Extremely strong performance on the margins and the bottom line. The top line numbers were a bit flattish, but the bottom line numbers were very strong. Maybe that stock does well. And Welspun Enterprises, they are L1. They have not bagged the order of 500 million, but L1 is as good as bagging, and which is why I think you're seeing some action on that stock, 6.5% higher. Do you track these on the chart, Srikanth? Welspun Enterprises, Inox Wind, or for that matter, Star Cement?
Yeah, for Inox Wind, yes, technically the stock is very strong. Yeah, it is very strong based on its technical formation. And whenever there is a trending activity and the stock is like crossing its previous high, most of the time we track these particular stocks. And if the sector is in particular performance, then I think this particular stock is definitely going to do well. Based on its technical formation, the stock has completed its correction in the near term, and now again it is trading above its previous high. So one thing is very clear that it is heading for at least 600 in the near term, but eventually, based on its complete wave structure, it is heading for at least 800. So Inox Wind is definitely a buy. Currently, it is far away from its recent lowest level of 400 rupees. So the strategy should be to look for adding position if there is any correction close to 540, 545. But at these levels, if there is any spike up to 600 rupees, then there one can take some profit.
Right, that is the word coming in on some of these names that Niraj mentioned. Power Grid as well in pre-open is looking pretty good. They've managed to record a 10.5% YOY growth in net profit to come in at 4,028 crores, despite a higher tax cost driven by healthy operating numbers. Revenue from ops has also grown 2.6% year on year. Pankaj, do you track Power Grid? It's, of course, eased off a little bit, but still indicating to a gap up in trade. Some of these state-owned electric companies look good to you?
So Power Grid, I think overall top line, bottom line performance look muted to us. So I think numbers are definitely not that inspiring. But yes, it's in an interesting space. So entire power as a pack looks quite interesting. So from that perspective, this company also looks good to us. I think the only positive was there was a decline in the interest cost. Otherwise, like I said, within the overall PSU power pack, I think NTPC looks a lot more better. Power Grid numbers, I mean, we are not looking to sort of chase the stock post numbers as of now.
Pankaj, earnings from the consumption space, Tata Consumers posted a pretty good set of numbers. Britannia as well was a little bit of a mixed bag. Nestle was also on the same lines, but out of the three, the outperformer has been Tata Consumers. Amongst these names, would you be looking to add anything to your portfolio, recommending this? Surprisingly, the stock is actually not looking good in in pre-open trade this morning.
So I think Tata Consumer has already sort of done well in terms of price performance, and we like the perspective that on the food side there are a good number of launches. So it's a fairly large segment, and they're going to sort of launch a number of products like poha or a lot of other kitchen items. But I think this entire FMCG as a space, I think our sense is that one thing is clearly coming out is that the rural segment is still not really great for most of them. Volume growth has been sort of tepid. The margin profile is already one of the highest, and our sense is that they're getting decent competition from the local brands. So this space, our sense is that is going to do more of a time correction. Really not been recommending these entire pack, and don't even suggest also. So while we may not see price correction, but time correction definitely is on the cards for most of them.
Pankaj, sorry, Shrikant, you want to come in on trend, and then I'll come to Pankaj on those earnings as well. Phenomenal stock performance in yesterday's trade, hit upper circuit. Today, you think there will be an entry point at some stage, and if another 3.5% pre-open is what we are picking up on. At 3,735, is this still a buy?
Yeah, it looks like the way there was like volume, and after a very long time, we are seeing volume in the FMCG space. So I'm going to say volume growth in the FMCG space. So I'm of the view that yes, if there are any investments, then just hold on to it, because it is heading for the levels of at least 4,500 in next couple of months. It will take time, but I think eventually it is heading for those levels. But with a trading point of view, I think it is better to stay away, because now the stop loss is far away from its immediate support levels. But in case if it comes back to the levels of, let's say, 3,500 or 3,550, then it's a best pick to buy and hold.
Pankaj, what did you make of those earnings? Spectacular, I would have said, and not just this quarter, but in the last few quarters, Trent is, over-delivered on its earnings front.
Absolutely. I think, forget quarters. If you look at last 4 years, this company has delivered about 35% CAGR kind of a growth, which is very impressive. I think the new format Zudio is contributing quite significantly. I think, so this company has been a sort of a standout outperformer. The only challenge is that valuations are definitely rich for this stock. But like I said, this is one company, if there is a correction, one should really look to sort of add it more, because I think they have really cracked the value fashion retail segment, and one of the best companies to sort of look at.
That's the beauty about some of these businesses. I mean, we've seen how people waited. I mean, there's been a time correction in D-Mart, yes, Avenue Supermarts. Not as much of a price correction. Trent is a completely different beast with what Zudio has managed to do. And it's quite stunning, really, the kind of gains that the stock has made in the last 12 months and before that in the preceding 12 months as well. So it's just been, I mean, if you pull up a 5-year chart for Trent, you'll just see that almost at any point of time that you would have bought into Trent, you would have made money. Just that's an expensive stock, and look at the kind of gains that it has had in the last year and a half. Quite spectacular, really, what Trent has done. Quite stunning. Sorry.
Niraj and I was talking about this to Rick outside, and we've talked about how Trent has delivered, not just on the stock, but in terms of earnings as well. And this is a Tata Group stable. You've seen that with Tata Motors going all the way from 67 to 1,000 rupees. We talked about that yesterday. Numbers of Tata Consumers, Tata Tech. Now, this explains why Tata was the first Indian conglomerate to cross the 30 lakh crore market cap in yesterday's trade. So, I think as a group entity, every company of theirs, if not turning around, is putting out their best foot forward and doing exceptionally well.
Yeah, and to be fair, TCS has largely, I mean, that's the heaviest weight, and that's largely played the cards well. I mean, 1 or 2 quarters notwithstanding, it still trades at a premium to the others. So, yeah, the market certainly gives them that credence for sure.
So it is one group that is been a street favorite, and for good enough reason. Shrikant, we've talked about a bunch of stocks, and I want to get your quick view on what are you doing at this stage with some of those real estate names? We had disappointing numbers from Sobha this morning. Of course, we will try and connect with the management to understand why the numbers haven't looked as good as as good as the brokerages would have liked. But Brigade, on the other hand, reported well. Prestige has been doing quite well in terms of stock market performance, at least. In the real estate pack, if I had to ask you to pick your favorite, which one would it be?
Yeah, these stocks did really well, but in this particular space, we like LoRa developers, Macrotech developers, which is currently trading around 1130, 1150. The formation is quite constructive, and whenever there is a rally, the stock is not participating into euphoric mode. So I think the stock is consolidating and going up, which is positive for the stock. So based on its technical formation and based on even fundamentals also, we are expecting stock to move towards 1220, 1250 in the near term. But in the long run, we are expecting stock to move towards 1500. I think a lot to come from this particular stock. Again, the strategy should be to buy on dips.
Gentlemen, actually, Shrikant, can I ask you if you had to bet on one stock for this morning? You've seen the pre-open rates. Lupin is already 6% higher, so you probably can't buy that. Or maybe you can. So post the pre-open rates, with the rates having settled, what is that one stock that you will buy? Quick 30 seconds.
Yeah, I would like to go with Indus Tower, which is around 220, 225. I think the stock can move to the levels of 240, 245 in the near term. So Indus Tower looks really good to buy.
Okay, it's 226. Shrikant Chauhan says stock to buy is Indus Towers. There's some action that we've seen in Vodafone yesterday as well. Samina had marked it on the closing show, and Indus Tower kind of, at times derives that strength, if you will. Let's see. Shrikant believes that there is more in store there. We'll talk about Pankaj Pandey's one top fundamental idea after the open rates are done. Mind you, stocks like Lupin, stocks like Kalyan Jewellers, stocks like Inox are all slated to have some very strong gains on open. But here come the first trades. This Thursday morning, ahead of policy, we are showing a spurt of green above 22,000 for the Nifty yet again. So good start to the trading day. The mid caps, actually first the banks, 200 points higher, so not doing bad, which suggests that IT is probably yet having another down day. Cognizant numbers didn't help either. Mid caps 0.67%, small caps maybe even better. No, 0.6%, so in line. One would have expected banks to be quiet. Maybe 0.5% is quiet. Let's pull up the heat map and see what's moving and what's not. Well, any losers firstly? Tata Consumer down about 2%. In the FMCG space by and large, Nestle, ITC, Tata Consumer, all three looking wobbly. Now the gainers. Power Grid, after 2 days of a fall, consistently falling. Post numbers 3% higher for Power Grid. BPCL continues its way higher. SBI 1.3% higher. That was one other Shrikant Chauhan idea. That stock has done very well. There is some strength in NTPC, M&M, HCL Tech, Adani Ports. It's fairly widespread. We don't have a particular sector dominating, to be honest. Life insurance continues to do well with SBI Life participating, but frankly, I believe the action lies outside the index, because on the index, frankly, the two names which stand out are Tata Consumer and maybe Power Grid, or maybe, Samina, you could argue that PSUs are having yet another good day, because from a Power Grid to a BPCL to NTPC to SBI, it is the PSU names which are the top draw.
I'm very surprised Tata Consumers is reacting the way it is. Those numbers were good numbers. Brokerages seemed pleased. There was a one-off cost that we saw, but that was on back of the acquisition costs. But apart from that, the numbers were great actually. 2% lower. We'll see how the day plays out. It is off the day's low point, so I think that's what some investors could be taking heart from. But your Power Grid is your shining star. Very good set of earnings, and the market is rewarding it. Well, a quick check on a whole lot of broader market stocks. Lupin on back of a strong set of earnings, and it's not just this quarter. Lupin quarter on quarter has impressed the street. Earnings are better than what they were expecting, or the street was expecting. Operational efficiency, North America sales, domestic sales, no observations, garners well for Lupin. The stock trades with a gain of 2.6%. A stock Niraj has been mentioning this morning is Indri Whiskey, which is Piccoli Agro. Very, very good earnings. The stock gets a thumbs up. Markets like the sound of that. Up 5% is what we get on the counter this morning. Star Cement, again, we've had a good quarter for the cement major. A lot of the cement companies, remember, have done quite well. We saw that with the likes of Shree Cement as well. Star Cement also reporting earnings, and the stock is reacting on back of those earnings. The counter trades the gain of 3%. JK Tyres yesterday, Apollo Tyres this morning. Again, strong earnings from Apollo Tyres. Auto Ants generally has been doing well. The stock, though, a little muted in trade despite the fact that it's been a good quarter for the company. Well, let's see the stocks that are reacting negatively to their numbers. So we had Soba Developers posted numbers below what the street was expecting. It's not done as well as its peers. There's been some delays in completion of the projects on back back of it, Soba sees a cut of 5% in trade. Gujarat Narmada, another fertilizer major, seeing weakness. It's a seasonally, or rather the last couple of quarters has been weak for fertilizer companies on back of the cut in subsidies and the fact that sales remain muted. GNFC sees a cut of 4%. Power Grid, of course, Niraj has already mentioned that, is looking fantastic on back of very, very strong earnings. So that's largely the broader markets reacting to earnings. But Niraj, beyond that, an SJVN on an order win, Welspun Enterprise on an order win are all actually looking quite good this morning.
Yes, they are, Samina, and that's a set of other set of stocks that you should mark. And by the way, so pull up SJVN, pull up Welspun Ent as well, and let's see what that one is doing in the session. Welspun Ent is about 4.5%. Now, stocks which were locked on an upper circuit yesterday, TRF, because of the merger getting called off, was up 20%. I reckon it's up 20% yet again. So good, strong move there for TRF. Then the other one was PAKA, PAKKA. That one was up 20% on that, releasing the plans for expansion. That stock is up another 7% today. So that is doing well for itself. There is strength in Yes Bank. That's the third one. 3 or 4 days on a trot now. Yes Bank has done very well, I must say. Someday, viewers, I promise you, sometime in the day today, whether on television or on our social handles, we'll put out some ideas about what is really happening with Yes Bank. Splendid showing the last 3 days. This week's chart would have been exceptional for Yes Bank. We'll ask Srikanth Chauhan about it, of course. But just a couple of other names. LIC. Viewers, 3% higher, if I'm not wrong. 4.5% higher now for LIC. Life Insurance Corporation of India. PM Modi mentioned this yesterday in the parliament about the fundamental strength of this one. And that is doing really well. What is not doing well is IREDA. Down about 5%, despite the management saying that the green energy opportunity is about 10 trillion or thereabouts, some large number that they spoke about. So that is interesting. And lastly, Inox Wind Energy, and CESC. 3 names which are newsmakers today. Inox Wind up 3%, Inox Wind Energy, the holding company, up 5%, and CESC up 2% because that's the company for which they'll be doing this 1,500 megawatt worth of work. So, no, all in all, newsmakers moving around.
Yeah. And talking about Yes Bank, Niraj, I think the stock has been moving since the HDFC Group got the approval to, of course, increase their stake in Yes Bank to 10%. Now, that's a trigger or not is anybody's guess, but the market seem to believe so, and the counter gets a thumbs up in trade again. You talked about LIC. There's also earnings expected later on in the day, so that could also be one factor that the markets may be preempting a good quarter for LIC. LIC also takes all its other insurance players higher this morning. So across the board, insurance is seeming to be a good enough theme. And we've seen that sporadically for a large part of this week. Stocks like New India Assurance, General Insurance are all trading higher along with LIC. So that's a space or a pocket, if I may say, is actually trading positive.
Yes, indeed. In fact, can we take that question to Pankaj Pandey before we thank him? Pankaj, life insurance plays anything out there?
I think our sense is that SBI Life is a lot more better placed. I mean, they've got a very nicely distributed portfolio across non-par, par products. And they have been sort of relatively doing well compared to competition in the last 1.5 to 2 years. So I think that is the only stock what we would prefer in the life insurance space.
Right. Thank you, Pankaj. Great having you today on the show. Of course, we will catch you soon. That's the view coming in on insurance play. On the sell side, Sobha, like I said, had a disappointing quarter. The stock is one of your top losers, down 5%. Paytm, after recovering quite, I'm not sure if I can say quite well, but after seeing a recovery in yesterday and day before yesterday's day of trade, the stock is back down below 470, 5.5% lower this morning. JK Paper, weak earnings continues for the paper manufacturer. Another quarter where the disappointment is obvious. The stock sees a 4% cut. Fertilizers as well, not looking good. EIH, after a very strong up move yesterday, is seeing a little bit of profit taking. 3.5% cut on EIH is what we have. Srikanth, you want to come in on some of these insurance stocks? Constructive on them? Srikanth, you're on mute. I can't hear you.
Yeah, Samina, I'm extremely sorry. So, most of these stocks have fallen to their extreme levels in the past, but yes, there are few stocks which are really doing well, and in that LIC, the way it has crossed its IPO price and volumes are there and specific news flow, I think this stock is going to do much better in the near term. Based on its technical formation, I'm expecting stock is moving towards the levels of at least 1300 to 1400. It will take time, but if there is any correction close to 950, because 950 was the opening price when the IPO got listed. So 950 or maybe 1000 is the area where one should look for adding these stocks with a positional view. We also like SBI Life, where we are seeing some momentum. But I think it is better to be specific more and more on SBI Life.
Shrikant, sorry, before we thank you, quick 20-second view. Yes Bank, the 3 days on a trot, it's gone well. Can it do more?
Yeah, Niraj, I think it was like very difficult for the stock to cross the level of 32, which it has made during the year 2020. And the way it has broken this level and the volumes are there, I think this stock has further legs to move higher. It is heading for at least 45, 46 in the near term. That's the overall view on the stock.
Okay, Shrikant, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time. 2 stocks or 3 stocks or maybe more in focus today. Mangalore Chemicals, Paradeep Phosphates and Zuari Agro. Varsha joins in with the details of this deal because there is more to it than just the swap between Paradeep and Mangalore. Varsha, take it away.
Good morning, Niraj. So first, let's see what is the deal. So the deal is that Mangalore Chemicals and Fertilizers has announced merger with Paradeep Phosphates. Now, this merged entity will become one of the largest integrated private sector fertilizer companies. Now, if you see, shareholders of Mangalore Chemicals will get almost 187 equity shares of Paradeep for every 100 equity shares held. Now, let's see who are the entities involved and who will get benefit from. So first, Zuari Agro Chemicals, which holds almost 54% stake in Mangalore Chemicals, is going to sell 33% stake of Mangalore Chemicals to Zuari Macro Private Limited. Now, if you see, Zuari Agro holds 50% stake in Zuari Maroc, which is a private limited company. Now, this 33% stake which Zuari is going to sell stands at 468 crore as per the current market price. Now, stake sale is going to happen at 565 crores. So, there's a premium of 20% involved. Then, Zuari Agro will continue to hold 21% in Mangalore Chemical and Fertilizers. Now, this 21% stands at 300 crore as of yesterday's closing price. So, in all, if you see, market cap of Zuari Agro Chemical stands at 943 crore. And it's getting cash of almost 566 crore. So, Zuari Agro will actually be in focus as holding is getting converted into cash, and the holding company discount of almost 40 to 50% will actually go away. Then let's see what it means for Mangalore Chemicals and Fertilizers. So shareholders will get 187 equity shares of Paradeep for every 100 shares held. Now the arbitrage on current market price, if you see, based on the swap ratio, Mangalore Chemicals shareholders will get return of around 18% when shares get converted to Paradeep Phosphates.
Right. So, Varsha, to break this down for our viewers who are just tuning in, what does this merger deal mean for investors or investors who are looking to buy these stocks? Zuari, for now, the stock trades slightly lower, and Mangalore Chemicals is up 8%. So, in a nutshell, good, bad, ugly for the independent companies?
So I would say it's Zuari Agro Chemicals will be in focus today. So good for Zuari Agro and also Mangalore Chemicals, as the shareholders will get almost 18% growth in value terms.
I don't think the markets are recognizing that just yet, but that's the deal. Niraj, you want to comment on this one? Zuari is getting a thumbs down, interestingly, in terms of stock price performance.
Yeah, well, it'll be interesting to see what happens during the course of the day. But just the fact that despite, I mean, one more play, Samina, wherein, before we hit that break, but one more play, that there is a large arbitrage and still not getting extinguished. Talk about efficient market hypothesis. It doesn't quite work out all the time.
There is an opportunistic trade right there staring at us. We'll take a break. We'll come back. But on the other side, we put the focus on the economy. Indranil Sen Gupta and Jayesh Mehta join us to talk to us about their expectations from the RBI governor. Welcome back. You're watching India Market Open. We're all gearing up to hear what the RBI governor has to say at this very important meet. Well, we have with us Indranil Sen Gupta, economist and head of research, CLSA India, and Jayesh Mehta of DSP Finance. Mr. Gupta, I'm going to come to you first. It's an important meeting of sorts. We've heard about fiscal consolidation, lowered market borrowing, growth seems to be holding up, core inflation has declined to sub 4%, and the US Fed has ruled out any rate cuts, at least in the foreseeable future. What are you expecting from this much anticipated RBI meet?
So we think that the environment is turning towards RBI easing. As you yourself said, that the fiscal consolidation process has begun. The Fed is looking to cut 75 basis points this year. And we are also seeing inflation come down maybe to 5.3% this in January. And of course, core inflation is actually in the threes. So against this backdrop, we think that the RBI cuts CRR by 0.5% of GDP this time to take care of the liquidity pressures and begins to cut rates from April. And overall, we are looking at a 100 basis point rate cut by June 2025.
Jayesh, good morning. I'm going to quickly talk to you about the liquidity piece because, we'd like a bird's eye view on what's actually happening in those markets. From September, liquidity has been tight in the system. What we did see very recently is call rates actually easing. Now, we also know that in the month of July and August, inflation also was much higher than the RBI's comfort zone. That is also now beginning to come off. A lot of people have been maintaining that commentary on liquidity is going to be very critical, and that could be the next driver for the bond markets. Is that the opinion you have too?
There are two parts to it. Of course, as you said rightly, from November, the liquidity has been tight. And some people interpret this as like pseudo rate hike when US was touching 5% and the situation didn't look that great. So kind of looked like pseudo rate hike. Of course, the official reasoning was government spending and the time taken mismatch kind of situation. I think now it is back to hugging more. Actually, it went below the repo rate, and now they are trying to maintain it around repo rate, and that's what the stance will be because situation looks more benign, and that's what I believe they would kind of try to now target more. Because if you really look at October, November, December, the situation globally didn't look that great. So I would say, though, of course, there is no official communication to that effect. I would say it was more like, wait and watch what's happening globally. And that's the reason maybe kind of without hiking rate, you manage it through liquidity by, making the repo rate go higher to almost like 675. So that's what I would put it around, because if they want, they can always keep it at 6.5, which is quite possible. So that's one part of it. And in terms of bond market, I don't think 0.25% repo rate plus minus really matters except for the short end. Right now, it's all pricing in further rate cut, not immediately, maybe June, but definitely no rate hikes, further rate cut. And of course, we have a huge flow coming in from the FPI inclusion. There's also very buoyant demand by FPIs because not only for inclusion, but also because the view on rupee is quite bullish. Buying bond is the best way to go long INR. So that's where we see very robust demand right now coming in from foreigners.
Jayesh, good morning. Niraj here. Since we are on the topic, with the government having done what it has done in the budget and the guidance given, if the RBI does not do an action but sounds dovish, let's say, hypothetically, sounds dovish, maybe a change of stance, what have you, do you think that spurs movement in the bond markets?
Yes, you see, if you really look at it after the budget, it moved to a new range, 706 and like 711, 712 looks toppish, right? We are moving towards 680. Now, it doesn't go in straight line, right? It may go to 711 again, 712 again, 708 again, but definitely the directionally is at 680. So both the things have happened. There is no reason for RBI also to be not optimistic about it. Only thing is, we may see that they may not really cut the rates immediately. Maybe they may want to see what's happening in US. So maybe that's what the general consensus is, only after the US rate cuts post June. But I would still give 40 basis point, 40% chances for April rate cut.
Okay.
Maybe that.
Okay. Indranil, I've heard you say in your opening answer, good morning, Niraj here, that you expect 100 basis points by June 2025. Do you concur with Jayesh that even if the Fed were not to make a move, and I think Jayesh mentioned that they will wait for the move to happen, but even if, let's assume they don't make a move, the Fed that is, can the RBI still do it? Because in some sense, the view post-budget was that the government has done what it has done. We're not satisfied with the growth rates that we may necessarily have, even if they're highest in the larger economies. And if we want more, it's also imperative upon the Reserve Bank of India to be a bit more benign.
So we have a 15 basis point rate cut in April.
Okay.
My view is that once the dollar has baked in a rate cut by the Fed, and it is baking that in, then there is no need to wait for the Fed. On the other hand, if you see, you are sitting at 6.5, core inflation is 3.3, which means your real policy rate is 3.2%, whereas the benchmark is about 1%. Even if you look at the overall inflation, which is 5.3, including the spike in inflation, you are beyond 1%. If you look at the RBI's own forecast of 4.9% inflation, 6 months, 9 months down the line, you are at a 1.9% real rate. So that's number one. And secondly, I think if you cut rates, given that equity flows are almost 20 times of debt flows in India, money will come in because equity markets chase growth. And once, as Jayesh also said, once you have the rupee appreciating, and rates coming down, if debt FPIs will also come, because then you are sending both capital and FX gains.
Oh yeah, I mean, this nuance missed me. We've two men who were earlier with the same company together on the show today. I just kind of missed that. Okay, Indranil, just wondering, in some sense, do you anticipate growth numbers to be strong second half calendar year 24 with the kind of numbers that have been put up in the interim budget? The government is not, pegged back on capex, just the pace of growth. But some people argue that if you look at Achar Sahita and therefore 11 effective months of operations, then the per month capex number is not that bad either, per se. Do you expect growth numbers to be strong, or would we kind of pretty much do what we would do? And would that influence the RBI decision as well?
I think growth could come down to about 6% in the calendar year, number one. And number two, there is a joker in the pack, which is the US slowdown. Is it no landing? Is it soft landing? Is it a hard landing? We do not know yet. So the base case is that growth will settle around 6%. On the one hand, you have El Nino fading away, which means that there should be a good harvest, a Kharif harvest, in October. On the other hand, the Fed is up in the air. The US's growth numbers are up in the air.
Okay, fair point. Final point, and Jayesh, this question is to you. What about the rupee? Again, I'm maybe not as much from the Reserve Bank of India perspective, but the next 12 to 24 months, there's a lot of talk around how the 4% annual depreciation piece may not be a thing of the future. One, is that a fact? Is that something that you believe in? And two, any of the RBI actions now or April, if they do 15 basis points or later on, even if they go ahead, if the Fed doesn't, does it have an impact on what the currency does meaningfully?
I think PLI plus the flow and all that, which will kind of pan out in next 2-3 years. That's very positive. And general view is rupee appreciation. I also am a big follower of rupee appreciation. But having said that, a couple of concern. While gold always has been there, fuel, oil is fine. I think it's still manageable as long as it's below 80. One of the new thing which is